Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Friday. Yeah, we've made it through another week. I hope you got a big weekend planned. 4th of July's coming up. By the way, we will be closed next Thursday and Friday for the 4th of July holiday. So if you want to get your gold and silver put away before then, just call us 800-951-0592. But don't worry if you don't. You can always go out to allamericangold.com. The store, the shopping cart, it's open 24 hours a day, 7 days a week at allamericangold.com. And Jason, we had the inflation numbers come out kind of as expected. It wasn't as low as they were hoping, but a little bit lower, 2.6% was the headline number. That was down 0.2 month over month. The super core was hotter than they would like, but still it was down 0.1, 3.3. They got all these funny names for all of these numbers that actually don't track inflation. But, hey, we'll call it an inflation tracker, but, it's one of those things where I guess the more educated you are, the stupider you need to be. And this allows them to just essentially make up numbers, right? I mean, that's what they're good at. That's what they'll do, telling you that, we had the headline, we had the PCE, we've got the core, we've got the super core, PCE, you name it, they've got something. None of them actually track actual inflation, but nonetheless, still hotter. But Jason, I think good enough to allow them to at least say rate cuts are still on the table.
That is right. That's right. If the numbers are looking more like the 2% that they're always talking about, then when all their buddies on Wall Street start to lose some money, when things start to get a little serious, as you were mentioning yesterday, it seems like a lot of consumers are coming to an end on the spending side. Then lowering the rates, they'll make that case that the data has shown them that it's time to lower the rates. Because nobody wants to take the blame for inflation. The little debate last night, you got the two gentlemen there telling each other it's their fault. It's your fault, Biden. No, it's your fault, Trump. I would say that none of them said it was the Fed's fault. Nobody wanted to blame the financiers.
Right. I got to tell you, that's a job I want, right? That's the job that I want, which is, hey, no matter what happens, don't blame me, right? I'm just here to help. Yeah. We're just trying to help. Don't blame us for all your problems out there. It is truly amazing when you think about how they seemingly always are the ones that, well, gosh, if it wasn't for us, look, it would have been so much worse, right? No. Actually, it's probably the other way around. But since you brought up the debate, I didn't want to bring it up. Full disclosure, I did not watch it. I woke up this morning to the headlines. I bet Joe Biden was, Joe Biden. I don't know why anybody expected anything different, but, oh, my gosh, he's got to be replaced. Oh, yeah, and Donald Trump's a liar. So that's what I took out of the debate.
We'll have to talk about the debate for the half-empty cup of Joe and just have the callers come in and tell us, because it was actually not the whole thing, but there was some very entertaining. It was very entertaining. It can leave you speechless what is going on as far as electing presidents nowadays. But you missed a very comical part in the second hour of the debate where they asked them about their ability to lead in their advanced age. I think they said that Biden would be, and I don't know his age. Is he 86 if he wins this thing? He'll be 86 when he starts the second term?
He'd be 86 when his second term would be over.
Okay, when it ends, okay. And Trump would be 82 when it ends. But they started throwing jabs about how well each of them plays golf, and it was fun. The only thing you can do about the government is if they throw you a bone for entertainment, then there is some there. And I think we're going to have a very entertaining few months with these two guys. And I'll say this: you've said it many times that you think we may not end up with the same two guys when it comes to the election. This is the first debate they've had in decades where it's before the nominations. These guys are not even officially nominated, and you might be right, Joe. Biden might not even make it. They might have to replace him at the convention in Chicago with somebody else. So all of these things, I'm sure, will make the economic markets a little shaky when it gets closer to that election.
Yeah, it's going to be interesting. I think it's something where it's probably another reason that you should be buying some more gold and silver, right? Just watching that, and even if you didn't watch it, just hearing the recaps, right? Whether it's the left or the right's recaps of it, it really does bode not very well for the future of this country. And when we're sitting here, we've talked a lot this week. This week was a lot, right? Because we highlighted money markets this week, right? We've got more rule changes coming in that respect. What really happens when the banking system crashes. By the way, if you want to go to allamericangold.com, Lynette Zhang again talking derivatives and living wills. If you want to check that out, we'll be back right after the 800-951-0592, Patriot Radio News Hour. Quick look in at the markets here. The Dow's up 90, the S&P's up 14, the Nasdaq's up 38. The 10-year note higher, little unusually higher, especially with the inflation data. By the way, consumer sentiment, another bad number there. So things definitely changing on the consumer side. My guess is this probably has more to do with France and Japan than it does here, but we'll wait and see. Crude oil, Brent is up. NYMEX is down a little bit, but $81 and change. Gold's off 30 cents. Gold's just kind of hanging out here around that 22.30 level. Silver's up about 30 cents right now, $29.25. Bitcoin just below 61,000. The Japanese yen higher again, so bumping up on 161 right now. And remember, we've got this French election coming on Sunday, which it seems pretty clear that there's going to be a change in leadership in France. They're calling it extreme change. They've got deficit problems. Today, China fired their head of the currency, essentially, in China. He's the guy that's, supposed to keep the yen in check. Well, he lost his job, so they'll be trying something new. Intervention is coming. We know what that means. More selling of treasury debt. And we keep telling you, the signs are there. Right? You can't say, well, gosh, I didn't see it coming. Right? I didn't see it coming. Got to get yourself protected here. Right? You know. Does Wall Street have another, 2, 3, 4, 5%? Maybe, but is it worth it? Is the risk worth it? No, it's not. That's why we keep telling you, how much gold and silver do you have? Whatever you have, it's not enough. Whatever you have, it's not enough. It's the safest place to be. Outside of that, check out our friends at YRefi. You get great fixed rates of return. What does fixed rate of return mean? It means it doesn't change. It's the same every month, month after month after month after month. The best part is it's not correlated to Wall Street. Right? Doesn't care about the Federal Reserve. Heck, it doesn't even care about inflation. It doesn't care about any of those things. Check them out. If you've got $50,000 or more, invest, yrefi.com, or just call them. That's the easiest thing. 888-YREFI-24 to look at that opportunity. But Jason, we're talking about this debate, what's happening in the currency with the yen, what's going on with France, of course, throw Italy in there, the treasury market. We are made aware this week, right? It's been a tough week because one of the places a lot of people think is safe, talking about money market accounts, they learned it's not that safe. Matter of fact, it gets less safe. I mean, it was bad enough that at any point, and see, it's fine, like today, it's fine today. There's nothing to worry about today. Right? Everything's calm. Right? You can go about your business with your money and market accounts, your bank accounts, your stock accounts. It's fine. The problem starts when it's not fine. That's when it starts. That's when all these crazy rules come into play. And guess what? Donald Trump has nothing to do with these rules. Joe Biden has nothing to do with these rules. Your elected officials have nothing to do with these rules. No. You don't even get a say. You don't get a vote. Oh, show me the rule in Congress. There wasn't one. Banking law. When you click OK, and you initial here, and you initial there, and you hit OK, and you sign your name, that's a contract. You're signing a contract. Now, let me tell you very plainly what that contract says. It says, hey, that money is no longer yours. But wouldn't it be nice if it just said that right at the top, right, in big black letters? Hey, as soon as you put this money in this account, that money's no longer yours. Wouldn't that be great? But that's all. They don't say it like that, but that's essentially what it means. At that point, when things get bad, they've got options. Option number one, we're going to put a penalty for you to withdraw your money. How much of a penalty? Is there a limit on the penalty? Is there a cap on it? Is it, 1%, 5%, 10%? How much? Well, guess what? Whatever they decide. That's the rule. Whatever they decide. Because the unfortunate thing is they don't want you to take your money out because that's going to damage the system. Right? Oh, there's already a run. We got to stop the run. So they're going to make the penalty. Believe me. It will be a big number to where most people say, oh, well, forget it. Well, you're going to take 20% of my money, 30% of my money, 50% of my money? No, thanks. I'll just leave it in there. Never mind. If it gets bad enough, they'll just say you can't have it. Yeah, that's in there. So you clicked OK on that. Yep, you even initialed it. And then you signed it. See, but now there's more. Now there's more. If all of that doesn't work, which in the event of a banking crisis, financial crisis, treasury markets that won't operate properly, even that won't be enough. In the case of a money market, if your money market breaks the buck, in other words, they're like, okay, here's the problem. We've got, pick a number. This money market account's got, $100 billion in it. Well, we don't have $100 billion anymore because we took all these losses, and now we're going to have to issue more shares. What does that mean? Well, that just means, let's just say you had 100,000 in there. And let's just say that they're like, man, we're 10% short. Well, not only could you not take your money out, right? Well, first they're going to give you a penalty. You don't want to take the penalty. Then they just said, well, you can't have it no matter what now. Now they're going to tell you, well, that your 100, I know you gave us 100 grand, but now you only got 90. But guess what? You still can't have it yet. We'll get back to you later. Right? Another month, 2 months goes by. Things spiral even worse. Uh-oh. Man, we lost another 20%. Right? Next thing you know, hey, you had 100 grand, becomes 70. Yeah, that's the rules. That's the rule coming this October for money market accounts. And isn't it interesting? The second everybody ran to money markets after the banking crisis last year, oh, well, here's a new rule. Here's a new rule. As Lynette Zhang told you, if you don't hold it, you don't own it. Period. Period. Now, some of you out there are like, well, what do I do with this gold? What do I do with this silver? Right? And I hear a lot of, well, I can't go to the grocery store and buy stuff with it. You shouldn't, right? And, of course, I laugh at that. I think that's kind of funny, right? Because I'm like, well, let me ask you this. Did you go to the grocery store with your 401k and your IRA and buy stuff?
Yeah.
Right? Have you ever done that? Did you go to the grocery store with your money market account and buy stuff? No. What you do is we have a lot of people now, because we've been doing this a long time. You know, we're approaching 30 years in the industry. It's a long time. We got a lot of people now. That's how they supplement their Social Security. They sell a $20 gold piece every month to supplement Social Security. I keep telling people, you know what? You need an ounce of gold for every year you've been alive. Every year your wife's been alive. Every year your kids, your grandkids, that's a minimum. And here's the great part. Well, I don't know if it's great. That's the wrong word. The nice part about it is, as all of your other holdings, either you're locked out, you got to pay penalties, they're devaluing the hell out of it, they're just taking your money. Gold, right? It's there, and it's going to be worth a lot. It's going to keep you whole. You're going to have a way to offset some of these things that are getting ready to happen. Yeah, you do have to sell it. Yes, you got to, come into Colorado, go see Jason, come here to Phoenix, see us. If you don't live here, big deal. You put it in the mail. It's easy. I'll guarantee you this. You get your money a whole lot faster than you do getting your money out of an IRA or a 401k, right? Think about all the hoops you got to jump through, all the forms you got to sign, this, that, the other, got to wait for your money. You can sell gold to us with a phone call. That's it. As fast as you get it in here, it's as fast as you get paid, right? It really is, Jason. It's that simple. I get it. People are scared. They're confused. They don't know what to do, right? And all of a sudden they start thinking, oh, my gosh, well, like junk silver. We say, hey, one of the cool things is you can use it to barter with. And people are like, well, how am I going to do that? It's the least likely scenario, right? Some type of EMP, the power's out for months, years. It could happen. It's the least likely thing, but don't lose focus. You're buying it for the silver. And it's government hallmark silver, even better, U.S. government hallmark silver, and it just happens to be a lot cheaper than a Silver Eagle. I don't care. We'll sell you the Silver Eagle too. We don't care. But Jason, I think a lot of people when they start to get worried, they start thinking, "Oh my gosh, how's this going to work? I don't get it." Right? Like, no, nothing changes. Now, the money may change, right, Jason? It may sell, and instead of giving you Federal Reserve notes, a check, a bank wire, right? It may be a digital. Right? A digital token, whatever it may be, but the process doesn't change.
I find it kind of interesting or funny how people are so feel so much at comfort because there's a number in their digital account that says this is how much money you have here. Right, Joe? And that every time I've ever done anything with my credit card or my debit card or wrote a check, it always works every time. Well, so does cash every time until it doesn't work, right, Joe? Everyone's really comfortable with the money that they use or the assets that they're using. And then, like you said, Joe, people are like, well, what do I do with all this? What do I do with all this gold and silver? How's this going to help me? It's like, it's pretty easy. There's always going to be a rich guy on the hill that will buy every ounce of gold you got. Never will end. It's been going on for thousands of years, Joe.
Yeah, absolutely. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Friday. And like I said, everything's fine when the market isn't having a crisis. Right? And you can go a lot of years without a crisis. How many? Well, it just kind of depends on how much debt. And we kind of learned, didn't we? I mean, really, we went from about $5 trillion to, well, right now it's over 40, but 35 trillion. Right? We've done that. What, in 20 years? Right? Here's the bad part. In the next 10, just the next 10, we're going to do it again. Problem is, it's going to go from 35 to 70. And we're having a problem at 35. So we know it's coming. We know. Everybody knows. The question for you is, how much of your hard-earned wealth are you willing to risk? By leaving it in the bank, by leaving it in the stock market, by leaving it in money markets, how much of that are you willing to risk? See, that's the thing they didn't want people to know, right, Jason? All of those are risk. Now, they cover it up, right? When we talk about discovery all the time, why do they prevent price discovery? Why are they always manipulating so we can't get good price discovery? Well, this is why, because they don't want you to know how risky it is. So then you can get, well, gosh, look how great the stock market's been for the last 12 years. Yeah. But how many of you got wiped out 12 years ago? 20, well, however many years it is now ago. How many of you got wiped out 07 and 08? Want to get wiped out again? How much of it are you willing to risk? Because every dollar that you put into gold and silver says, this is how much I'm not willing to risk. It's really that simple. And I'm telling you, and I always tell you, don't put all your money into gold and silver. I do. I think some risk is okay. But man, you got millions of dollars. Why would you risk that much? You got hundreds of thousands of dollars. Why would you risk that much? Because I'm going to tell you right now, after the crisis ends, because it will, It will end. Hey, you can sell some of that gold and silver and take more risk again if you want. But that's really what we're talking about. How much of your wealth are you willing to lose by not having gold and silver put away? Because, Jason, we hear it all the time. I wish. Right? I wish. You know how many people tell me, man, Joe, I remember when you first joined with Eric, and I wish I had bought gold then. It was $300. I get it. You know, people look at, 2,340, 2,330, 2,340, 2,350, and they think that's a lot. It's not a lot. It's not. Matter of fact, this kind of reminds me of like $250 gold. Yeah, okay, it's added another zero. But look at what we've done. 35 trillion in debt added since then. And I'm going to tell you, in 10 years, we're going to add another 35 trillion. If we're lucky. How much are you willing to risk? Now, we talk about this all the time. We've got three types of customers. The first type, and it's not a lot, 5-10%, they're preppers. You guys are preppers. I love it. It's great. Their biggest fear is anarchy, right? There's no law and order. You can't go to the grocery store, right? There's no power, whatever it may be. I will tell you, that is the least likely outcome. See, they want control. Believe me, they don't want the power to be out, right? They don't. They want you to still be able to go to the store and all that. But, an EMP, something, it's a possibility. And they we call it junk silver, utility silver, dimes, quarters, half dollars. They primarily buy silver. Some of them, and maybe some 10th-ounce gold eagles, and maybe even a $5 liberties, some fractional gold. That's where they live. Don't lose focus, because you'll hear me say, hey, you can barter with it. You can, go to the drug gang and get, some antibiotics with some silver quarters or dimes or what have you. Don't lose focus here. You're buying silver. That's what you're doing. It's nice that, what if the least likely scenario does happen? Hey, I do have it. That's a good thing. Believe me, you don't want to meet the head of the Hell's Angel with a $20 gold piece. Why? What do you think they're going to do? They're going to take it from you. Right? So that's one customer. Then we have another customer, which is, I don't care about anything. I just want as much gold as I can, and I want to pay the least amount possible. That's another, 5-10%. And I want to be private. Well, that's $20 gold pieces all day long. And that's all they buy. They don't care. I'm going to stack it up. That's what I'm buying. I've got a hedge. This is the amount of money I'm not willing to risk. And I'm going to buy it in $20 gold pieces. Every once in a while, maybe they'll buy some 10s. But that's all they buy. The other 80% of our customers, they're like this last guy. Hey, I want to be private. I want to buy cheaply. But also, you know what? The prepper guy, I know it's the least likely scenario, but just in case, I'm going to have some of that. And they do. And you've got a well-balanced, you got some junk silver. You got some silver eagles. You got some 10th-ounce gold eagles. You got $5 liberties, $10 liberties, $20 liberties. And, of course, now as we're watching the gold price exploding higher, having that fractional gold, probably a good idea, right? Because, hey, I'm going to use that to supplement my income in the future. Well, a $20 gold piece is $10,000. I don't need $10,000, right? I just want $2,000-$3,000 a month. Well, that'd be a $5 liberty, right? I mean, I hope that helps. When we get back, we'll talk some more about it. We'll get Jason to chime in because I know he's got his thoughts as well. We'll be back after. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Friday talking about how's gold going to work in the future. What do I do with it all? Well, you got to remember, you're taking risk off the table. How much is in your bank account? How much is in your stock portfolios, your 401ks, your IRAs? How much is in your money market accounts, right? All of those things. By the way, insurance contracts work the same way, too, just so you know. Okay. They're happy to pay you right up until they can't. And then when they can't, guess what? Too bad for you. But neither here nor there. You add that all up. How much are you willing to risk? How much of that are you willing to lose? Because believe me, you're going to lose it. You know that. We know that. That's how this works. Let me, and I'm going to get Jason in here, but I want to remind you, we're running deficits $2 trillion plus a year already. We're going to hit $3 trillion here pretty soon, a year. Just in the next 30 years. This isn't that long. In the next 30 years. Social Security and Medicare, just those two programs, will run $124 trillion cash deficit over the next 30 years. That's a fact. $124 trillion. I didn't talk about interest on the debt. I didn't talk about any other debt. I didn't talk about any. That's just those two programs. So understand what's coming. I hope you do. And understand why they put these rules in. There's a listen, I hate to say it, but Jason, there's a good reason they put all those rules in place because they know what's coming. Right? And they want to make sure that, hey, when they say we've got blah, blah, blah assets, you know what they're talking about? They're talking about your money. That's their assets. That's what they're talking about, Jason. And for a lot of people, I hope this kind of clears up what it is that they're trying to achieve when they're buying their gold and silver and putting it away.
Yeah, and what we're covering today, and Joe and I, we just talked about it. We get a lot of questions, especially from newer customers, even customers that aren't newer, just saying, "What do I do with this stuff?" This is what Joe's been explaining the last two segments. He's just telling you this is. Let me make it from my point of view. There's different ways to approach it. A lot of you people out there that are listening to the show, a lot of customers, you buy a house. A lot of you guys are homeowners. I could say the same thing. What are you doing? What are you doing with the equity on that house? What are you doing with that house? Gold is a lot like owning a house. You live in your house. You physically are possessing your home. People feel let's face it, the number one asset that most families cherish the most is the family home because they know it has value to it. You pay down that mortgage, you have equity. Times get tough, you could borrow against it. Gold is the same. It's actually better because if you need to get up and leave, you can't just get up and take your house with you. You can get up and take your gold with you. If you really, really need money, hey, I need to save. My son got into a bad accident. I don't know, some horrible thing happens, and I can sell my house and pay for the emergency. Gold is the same thing. So a lot of people, they get confused. It's like, well, it's just sitting there. Well, it's got value. But just like Joe said, your 401k or cryptos, or you own a business, you own a laundromat, right? And this is how you make your money, right? There's different investments that can make you money. Well, when it comes to gold and silver, physically possessing it moves a lot faster. It's a lot speedier. If you look at the long-term trend, I think 25 years, Joe, gold is just below 10% a year for 25 years. I never tell people that it's investment. I say it's savings. If you're in investments that aren't giving you 10% a year after all the fees and taxes and everything else that gets heaped on you, you might have just been better sitting in the gold. I made an investment when I bought into this gold and silver company, not because strictly gold and silver. The company was a way that I was going to try to make my money, and it was with something I understood, gold and silver. If I understood laundromats, I'd own a laundromat, and I'd run laundromats, and I would make my money doing that. And you would just as well say, well, what are you doing with a laundromat? Well, people that know stocks and know the stock market, you will make your money there. But if you're listening to this show, a great many of you don't understand the stock market well enough to sit there and make money doing that. You have to be interested. You have to be involved in that. So what we're trying to do, what we're always trying to do on this show, is try to tell you, hey, you save up a nest egg, you got this extra money, whatever you're an expert at, whatever you're making money at, you end up with this extra money and you don't know what to do with it. And if you just, without thinking, with impatience, start throwing it at different investments, you're going to lose in so many ways unless you understand it. Gold is savings. There's not a lot to have to understand. It goes up every year because we have inflation. Anybody that's listening to this, you've been in the age of inflation, which started in 1913 when the central bank started stealing from everybody. So as long as you think things are going to keep going up in price, like they have during our generation, our fathers, our grandfathers, then gold is going to go up with the inflation. You won't lose on it. So, Joe, to me, it's about the ease of gold. Gold is easy. It's savings. It's like anything else, but you don't have to be an expert on this stuff as a place to hold it safely.
There you go. I love it. I love it. Right, and that's the funniest thing. Gold really is easy. That's the truth of it all. It isn't complicated. Don't make it complicated. Patriot Radio News Hour, final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason, final segment of the week. Remember, next week it'll be a short week, so we'll be here Monday, Tuesday, and Wednesday. Then we'll be closed Thursday, Friday for the 4th of July holiday. Today's special, and this is something where I feel over the next 2 to 5 years, this may become the most popular gold coin we sell. Right now it's still the 20, then the 10, but the $5 Liberty, just because of where I think gold's heading from an affordability standpoint. Jason will tell you, when Jason first started, we were selling $20 gold pieces for what? $1,300, something like that.
Yeah, $1,250 to $1,350.
Yeah, right. Okay, right. Today, $5 Liberties, $665. If you buy 10 or more, just 10 or more, take them down to $660. 800-951-0592. And just tell the girls you want the special. We're going to ask you one hard question. How many do you want? Right, and this is the old pre-33 gold, these Liberties, 1866 to 1907. For those of you that have never bought them before, you'll be amazed. They look, for as old as they are, they're good-looking coins, sharp-looking coins. And, I get the feeling, Jason, that this is going to be a coin where very soon it's going to be $1,250, $1,300, $1,400, $1,500. So pick them up here, because remember, too, at some point you may need to live on this. And I think this is going to be something, as we see the price of gold continue to rise year after year after year after year after year after year, right? That having something other than a $20 gold piece could be a great benefit. Right? Hey, well, gosh, I don't need $10,000, right? I need $2,500. Well, I got $5 Liberties. I'm going to sell those, right? Those are. I think anyway. We'll see how it goes. But remember last week, man, we blew out those 10s, right? That's kind of becoming the new 20 because it's a little more affordable here. $5 Liberty, $665, 10 or more, $660 at 800-951-0592. And just remember, what are you doing? This is the amount of money I'm not willing to risk. I'm not willing to have it locked up. And that's the other thing, too. When it comes, because it's coming. If they lock you out of your money market account, they lock you out of your stock market account and say you can't sell right now, but you need money, you can always turn around and sell that gold and silver to us and get money that you need when they're locking up your other investments. If you don't have it, what are you going to do? I think that's the other part that no one really is talking about right now. What are you going to do if they lock up your other avenues to your wealth?
In Venezuela, several years ago, 5-6 years ago, when they were going through some of their hyperinflation, there were some areas of Venezuela where you could get an entire house for 1 ounce of gold. And if America's going desperately in the wrong direction, Joe, that's not something that's going to hold. But, man, when panic sets in, right, gold could be quite the opportunity if you're just sitting there holding on to it. Nice and comfortably and biding your time.
God bless everybody. Jason and I, we're going to wrap up the week with the half-empty